Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for January 15th through the 19th. We're going to be talking about the three main indexes and how they performed. We're also going to be taking a look at my portfolio, just performance-wise, what did it do, up or down. We're going to take a look at payouts for the week. I was paid out dividends, and I got a sizable, payout by Merrill Edge for being with them for 90 days. So depending on however much money you transferred from one broker into theirs, or if you transferred just money and began investing with Merrill Edge, then they would pay you out a specific amount. So I was able to pick up $150 Friday and was able to put that to work. So we're going to be talking about my weekly trades, and then after that I have 6 stocks I'm going to be covering. One of which was predicted by someone on there to have been, it was predicted to be bought out by Amazon. On my Facebook, I shared out that post saying, if anybody's going to get bought out by Amazon, I believe it would definitely be Kohl's. So we're going to be taking a look at Kohl's, Target, and a few other ones. They've done really well year to date, but they did pretty terrible back in 2017, some of them. So let's go ahead and get into it. We will be starting off our video by talking about the indexes, but of course I like to take a look over at CNN Money Market, and I always like their graphs a little bit better. So we started a very strong Monday, and then leaping into Tuesday, all three indexes were super high opening on Tuesday before falling back and having that negative day. That was a bit of a it was needed after last week's gains and how far along we've actually come year to date. So S&P 500 up 0.86% this week, 3 out of the 5 days positive. Year to date up 5.11%. Dow Jones again 3 out of 5 positive days, up 5-day change 1.04%. At a year to date of 5.47, so they are in second place. And of course, in number 1 we have the Nasdaq, 3 out of the 5 days positive with a 5-day change of 1.04. So this is actually the same as the Dow Jones, but they are up year to date at 6.27%. So very nice on the indexes. They are all up very nicely. My portfolio, I had a bit of a rough week last week, but after last week's sort of recovery and then kind of picking it up this week, I was able to increase my portfolio by 3.14% this week. So that definitely puts me right around, I don't believe I'm actually caught up with the S&P 500 right now year to date or the Dow Jones, but I'm chugging right behind it. Now, weekly dividends, here I have this split up here. So I have my non-retirement account. So I was paid out on the 15th of January. I was paid out by Entertainment Properties, $15.98. That was my only dividend I received this week. So third week of the year, I'm excited that this is nearly $16. So $16 in a week, it could pay for my lunch if I wanted it to. I go out buy salads every day for $3. That's $15 for 5 days. So this could potentially pay for a week of my lunch if I needed it to, but I didn't, so I was able to take that and reinvest it. So this added to my total year to date of $95.57 in dividends so far in 2018. So my weekly trades this week, this is a little bit tougher. Normally I do my trades, I'm going to have to correct that. My trades are normally done inside my Roth IRA. This is to avoid paying capital taxes or just taxes on my capital gains and dividends, but I was trying to move my reality income from my non-retirement account into my retirement account. So what I did is I saw that this was having a bit of a pullback, so I decided, you know what, I'm going to sell my 68 shares at $53.40. I'm still long-term in reality income, but I wanted to move it into my retirement account. That way future dividends are not having to get taxed at my regular income. But instead, the funds they were in that kind of settlement period where I couldn't transfer them over into my retirement account. I couldn't transfer the money into my retirement account. So then I waited for them to kind of trend down a little bit, and I was able to buy them back at $53.30. This provided me a difference of $6.73. That was, basically I was able to average down during this trade, although I did create a taxable event. I was able to make a difference of $6.73. I'm going to continue to kind of play with reality income. I talked to my broker. They said if I want to try and sell this position and move my funds, so here I was wanting to sell my O and move it into my Roth IRA. My plan did not work and I had to buy back at a cheaper price, averaging down my initial cost, getting some money out while buying the exact same shares. I'm going to be calling my broker next week to see if I can sell, release my funds to be moved into my Roth IRA, and then rebuy O at a lower price. So I'm going to wait a little bit next week until they're kind of having up and down day. I will sell my O reality income at where I believe will be a good position, where it will trending back down, and then I'll call my broker up, say, hey, can I get my money transferred into my Roth IRA? They'll make the transfer, and then I'll try and buy back into reality income at that lower price, again averaging down, creating another taxable event, and then, but these are tax losses, but I can't defer them because I'm buying the stock back in within a 90-day period. So that's my whole plan with reality income and EPR. I'm just trying to sell those and move those into my retirement account. So as you know, I was paid out $19 or $15.98 this week. I also got my $150 for being with Merrill Edge for 90 days. So with that money and the money here I made during the difference here, so $6.73, $15.98, and the $150, I was able to buy 4 additional shares of reality income at $53.39. So here you can see that I bought these back at $53.30, but I bought these ones at $53.39. So this stock was bouncing quite a bit for a while between $53.40 and $53.30. I was able to pick these up pretty cheap. It's actually been a little bit lower than that. I believe it was in the $53.20s for a little bit. So I'm picking more shares up. And here you can see that based off these 4 shares, my primary goal right now is to move my REITs into my Roth IRA, use this discount time to buy great long-term dividend. Okay, so my note here basically means that I'm using this current time in REITs, all real estate, I can't think of it, real estate trust funds. Boy, I cannot think of reality, I got reality income in my head now. Real estate investment trust. There, I had to look at the actual acronym. So real estate investment trust, they're on a downwards trend right now, but I believe O is always a great long-term buy and hold stock for me. It's been paying out dividends for more than 22 years, more than 20 years, but it's had that continued growth for over 20 years. It's also been able to recover during recessions. It has a very nice diverse portfolio. It has dividend growth, so I can buy and hold the stock for the long term. They recently increased their dividend payout by like a 0.01. It's only a penny, but that increase, depending on however many shares, that's an additional 50 cents per payout and such. So it's definitely nice to kind of get. So here you can see my total profit for my weekly trades was just being able to get that difference of $6.73. With the 4 shares that I purchased of reality income, this will increase my monthly income by 87 cents, or if you multiply 87 by 12 months, that's $10.44 that I will make in a year based off just my 4 shares that I bought into my Roth IRA. So this is definitely a very yes move right here. And that is basically it as far as my article goes. Of course, you don't have my disclaimer here at the bottom. I'm not a financial advisor, tax professional. All the information provided in this video is just my opinion and for fun. Okay, so moving over to our discussion stocks, we're going to be taking a look at Home Depot, Kroger, Target, and Kohl's. Now, there was a prediction made that Target would be the one that would be bought out by Amazon. My prediction was if anybody was going to get bought out, it would definitely be Kohl's. So here, I took Home Depot is just here. This is one that I had been looking at. It's really not, I had looked at Home Depot and Lowe's when I was looking into purchasing one of these stocks, and Lowe's had such a nice, good opportunity back when Amazon bought Whole Foods and everybody got scared that I had bought in Lowe's, but I don't know how I would consider buying into Home Depot. This is one that's trending at its 52-week high. Let's see, I was just using this a bit ago. So let's go ahead and look at its price, its yield, its PE ratio, and its price to book value. And let's take a look just over the last 3 years. That's a lot of information up on there. So what can I remove? Let's go ahead and get rid of that book value. We'll just look at the price and dividend yield right now. So dividend yield is at a 1.7%. This is the lowest it's ever been, or since for about 2 years. January of 2016 was the last time that this stock was at a 52-week high where the yield was at 1.77. What happened back in January of 2016? You can see that it had, this stock fell from around 135 all the way down, hitting around 115. So that's not to say that it's going to happen again, but it could possibly happen. This stock is trading at a 52-week high, so it would be very dangerous to get fully invested in the Home Depot at this time, just because it is trading at nearly 52-week high. Its yield is at a very low point. Just looking at what happened back in 2016, there was a very sharp drop over the next few months, and then it kind of just continues on. You can see it happens. So that's all I'm going to be talking about Home Depot. Next is Kroger. So Kroger, Target, and Kohl's. Kroger, I don't see them getting bought out by Amazon at all. They have done very positive year to date. They are up 8.27%. I think this is great. I had looked at Kroger to add it to my portfolio. I thought it would have been a great stock. Its ticker symbol is KR. One thing I didn't like on it, it didn't have a lot of dividend growth over the last 9 years, or didn't have dividend growth for the last 10 years. So I didn't want to add it as a long-term buy and hold. And then I believe its dividend growth. So yeah, it's dividend growth. See, it went from 12 cents over to 13 cents. So it's a pretty slow grower. We can see that it increased its dividend by half a cent. So if we take the current dividend payout, subtract it by the original dividend payout, and then divide by the original dividend payout and times it by 100, they went up 4%. I like to have dividend growth around 5 to 10%. I think that's a great dividend growth. And then this one, I could see they have a very nice payout ratio, but why are they not increasing their dividend growth? Why are they not increasing their payout ratio by, say, 5-7% instead of that slow? They have the earning potential to be able to pay that out. So that was something I had looked at on them. Let's see here, Kroger, taking a look here more at Kroger. So this stock has trended down quite a bit, hit its support line back in, say, December. They were at, say, a $18 range, so they have definitely jumped back up. But look at where they were at a point. They were reaching $42. So this is one. Their price does look like it's, it bottomed out. It's definitely on its way back up. But what caused it to kind of fall out of favor over the last just a year alone? So here within a year, 2017 was not a great year for this stock. So I would definitely want to research why this stock fell out of grace. What caused it to fall? Was it free cash flow? Was it net, revenue? Was it income? Over the last 5 years, you can see that this stock is actually pretty flat as far as net income goes and free cash flow normalized. So that kind of percentage wise, they are up slightly, but this is over a 5-year period. So if you just take, this is up 3% per year average for the net income, 2% for revenue, and 1% for free cash flow. So very low numbers there on Kroger. And the next stock, this is one that I think a lot of people are buying in just because if the prediction turns out to be true with Target, they will have got a very nice increase over the last, you can see, let's check out the year to dates on both the Kohl's and Target here. We can see that back in January of 2018, it probably bottomed out here right around that $67-65 point. That prediction came out. This guy's, I don't know, I didn't read much into it. If he's a holder of Target, he came out saying that he's predicting Amazon's going to go out and buy Target, and he's probably, has a huge amount of, he could hold quite a bit of Target. Anyways, from then on, this stock had been getting a lot of volume trades and has brought the stock up very nicely, nearly 20% year to date, whereas the S&P 500 is up 5%. So you would have got nearly 5 times what your current return. That's Target, or Kohl's. So Target is up 4 times what you would have got with the S&P 500. And they pay out a very nice dividend. Target's dividend yield, I believe, was around 5%. We can go over to our fundamentals again. That's fine. And we'll put in TGT. Whoops. So we're looking here. There we are. So over the last we'll look at 3-year period. You can see that they are up very nicely, $78.10. They were down in the $50 range, so that is a very nice gain back from July of 2017. Would have been the optimal time to have bought this stock. This is where the yield was exceeding 4.5%, which is extremely high for Target. You can see that Target, it normally hovers between a 3.0 yield, and it may go down to like a 2.5. So 2017 was probably a terrible year for Target because Amazon, the announcement of they're buying Whole Foods, that caused the stock to plummet. People were asking themselves, is it going to be like a lasting thing, Target? And of course, it hit its support. It's definitely got rallied behind a lot of people picked up the stock believing the prediction possibly, or just believing in the stock as a whole. And I believe actually when I've looked into the stock in the past, they are up, we'll say 5 years. Okay, they are down in net income, they're down in revenue, their free cash flow is slightly up, so not a great stock that I would look at really over the long term. And if I go back to normalize, we can see that their price to book value is actually still pretty high, 3.8, a little over what a value investor would look at. We can see that their PE ratio, it is 16.37, whereas over the 10 years, what's their average around? Okay, so their average is around 12.5 ish. You can see here it does trend around 12.5. There are times where it does exceed, doubling almost to over 30, but it definitely does have a bit of a pullback and comes back down. So that is Target. And then of course Kohl's. I think if Amazon was going to buy any stock out there, I think it would be Kohl's. Kohl's does really well. Kohl's and Target. Let's see here. KSS. Whoops. There we go. Kohl's. So Kohl's, taking a look at their chart over the last 5 years, we can see that they also had a bit of a rough 2017. Let's just look at 3-year period. We can see 2017 started right here, fell all the way down, bottomed out right around June-July period. If you would have picked this up in June-July, you would have got a yield over, say, it looks like almost 6%, if not right around that. And then you could have easily picked this up from $40 and rode it all the way up to where it's sitting at $67.54. Now, over a 5-year period, when's the last time that, again, this is very similar to Home Depot, when's the last time it's been at this price target? It's peaked out before coming back down back in 2015. So this could continue to rally and increase. But you can see that, if you're trying to buy this stock for the growth or the yield, you're not going to get it right now. The yield's actually at a low point where it was back in, say, 2015 timeframe. And then you can see what happened to the stock price, and then the yield kind of shut up after that in 2016. So it definitely does these waves where the price goes up, comes back down hard, price goes up, comes back down hard, price goes up. What's going to happen next? So those are the 4 stocks I kind of wanted to cover with you guys, as well as my weekly recap as far as the market goes, and then my portfolio changes. So hopefully, if you guys were taking a look at Home Depot, Kroger, Target, I still think, Target's a bit overpriced. These are all kind of a bit overpriced. I should try and look for ones that are good entry points, but that's what my 5 stocks with X dividends is for. I try and look for random 5 stocks with X dividends coming up next week, and then look at some entry points like CVS right now. It looks like a great entry point. That's one I was looking at. And of course, I'm right now targeting a bunch of REITs inside my IRA, my Roth IRA, just so I can get that dividend income built up, have that growth in there, and not have to pay taxes on it till never, because I won't withdraw until 59 and a half. So that is it for this video. I hope you guys found it entertaining. If you did like the video, hit the like button below. If you are brand new to my channel or a recurring viewer, hit the subscribe button. It really helps me out. I appreciate it. Again, going for my 1,000 subscriber goal by June. If you have any questions about anything that was covered, just go ahead and leave that in the comments below. I will always reply back to your comments and questions. And of course, as a disclaimer, I'm not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is non-investment advice, and you should always consult a professional financial advisor. I'm just an investor, just like you guys, trying to make my money work for me. So that is it for this video. Have a great day. I will see you next time. Bye-bye.